This chart shows a different story to what most people want you to believe. Bitcoin is not necessarily long-term growing, at least in terms of its usage. This is the number of transactions on the Bitcoin network, the 7-day moving average of the daily activity. And since 2018, there was pretty much zero growth. Instead, we see very clear cycles of hype and subsequent silence. This here is the transaction fees measured in US dollars, again over a very long time frame starting in 2017. When crypto is rising, when everybody gets excited, many transactions are being performed, and that's great for the Bitcoin miners. They get money as investors transact their Bitcoin and pay for fees. The problem is that this income is extremely volatile, right? Nobody can keep a business for 2 or 3 years with very little to show for it, just to hope for the next wave of cash flows. By the way, the last 1.5 years have been again quite silent. There's another major headwind for the Bitcoin miners. That's why many people moved to the AI space. Every 4 years, the number of new Bitcoin that gets issued through the Bitcoin subsidy gets cut in half. We are currently at a supply expansion of 0.83% per annum. And in 2028, that will go down to 0.41%. Now, luckily, there aren't just the transaction fees. There's also the subsidy. And this is what keeps the miners in business. Yet the subsidy gets cut in half regularly, but the price of Bitcoin also doubles regularly. At least that's what it did in the past. And interestingly enough, the miner revenue measured in US dollars is somewhat constant over the last 5 to 6 years. And it might be slowly growing over time. Why is this so relevant? It's relevant because if the miners don't make enough money to secure the network, it becomes less secure. And that will potentially question the validity of Bitcoin being a long-term store of value. So we do need to see the miners getting rewarded for their work, getting rewarded for their investments. Given this halving cycle, we need a minimum price appreciation of Bitcoin that's 18.9% annually. And I think that's a reasonable growth rate. And here's why. Have a look at the percentage of Bitcoin that has been active. So in the last 7 days, we see this blue line over here. It's relatively constant. In the last 90 days, we see the green line. And of course, there's more active supply during bull runs, right? This is when Bitcoin peaked at around 20K. This is where it peaked at around 60K. This is where we went to 100K. But once we look at the longer term Bitcoin, so how much of Bitcoin supply had been active over the last 5 years, that tends to trend down. It's also true for the Bitcoin that has been active for the last 3 years. It also tends to trend down. In other words, there is a strong cohort of Bitcoin investors that simply just set and forget. Either they've forgotten their keys or they simply just hold Bitcoin as another mechanism to store wealth. Besides property, besides stocks, besides precious metals, it's just an additional part in a portfolio that's not being used for active trading. And so the nature of the crypto ecosystem has changed massively over the years. Yes, the number of transactions might still be creeping up slowly. Again, this is a long-term chart. It's not that clear that there's still a lot of growth. But the chart that's clearly not growing anymore, that's the number of active addresses. That has peaked in 2018. So the addresses that are still active seem to make more transactions. The number of addresses is not going up. There was very clear growth up until the point of 2018. Bitcoin hit 20K at that point here. Since then, we really cannot justify any additional performance of Bitcoin's price with more usage of the network. There has to be another justification. 2018 was a central reflection point. Because have a look at this. This is Bitcoin relative to the Nasdaq 100. Now, why do we want to make that comparison? It's because both are risk-on assets. Both tend to go up when everybody wants to get risk exposure. Both tend to crash when things get rather tight, when liquidity tightens up. And since the end of 2017, the beginning of 2018, we have not seen Bitcoin outperform the Nasdaq 100. Yes, we have had our crashes and subsequent recoveries. There is more volatility in Bitcoin, but there's not necessarily clearly more growth long term. Have a look at the interest in Bitcoin over time. That also peaked at the end of 2017, beginning of 2018. Since then, the number of search queries for Bitcoin have rather trended down. Of course, every now and then we had our interest spikes that tend to coincide with price rallies, but every spike was smaller than the prior one. Now, when we zoom into this chart, when we just look at the last 5 years, this might be a potential opportunity, right? We want to buy whenever interest is low. We want to buy when nobody is interested in an asset. Everybody is now looking at precious metals, at gold and silver. Some are also still discussing technology stocks like Nvidia, etc. Very few people still have interest for crypto. And so you, by definition, by watching this channel, are contrarian. You are looking at an asset that most people have forgotten. You have a higher likelihood of coming out as a winner. And so that in itself deserves a like for you, not necessarily for this video. But of course, if you so far enjoy this content, a thumbs up would of course be appreciated. Many stories around Bitcoin have died over time. For example, the idea that Bitcoin becomes a new form of electronic cash. This is how it started. Bitcoin was not used as a store of value, but as an alternative underground currency for Silk Road, right? This was an online marketplace to buy goods and services that were not available on eBay. Subsequently, the narrative of the Lightning Network got some traction. That was the idea that Bitcoin would be used in day-to-day commerce. Now, this is the Lightning Network capacity, and unfortunately, that has not grown since 2023. We can also see how the number of whales is not necessarily growing anymore. That growth has stopped in 2018, again. That's also when the outperformance versus other risk on assets stopped. But then subsequently, even the number of wallet addresses with at least one BTC has stopped growing. And that was with the launch of the Bitcoin ETFs. So the entire idea of Bitcoin being self-custodied money that cannot be taken away by governments, that's completely decentralized, where we can transport wealth across borders easily. It seems like many of those benefits do not outweigh the convenience of buying the asset via an ETF. Buying through an online broker is more convenient. It's also for some people more safe, for people that aren't able to store their seed phrases in a proper manner. I know friends that have lost access to their Bitcoin, that have lost their funds because they haven't been careful enough with storing their seed phrase. For them, the ETF, of course, is a blessing. But it very much looks like the narrative of Bitcoin is shifting. It's not e-cash anymore. That's also how it was described by Satoshi Nakamoto in the initial white paper. But it's also not necessarily anymore a decentralized form of wealth storage. At least that's not a growing market. Otherwise, the number of addresses with one BTC would be going up. Really, future price growth has to come from the ETFs and from the treasury companies. Luckily, they continue to buy. Pretty consistently, every quarter we see more Bitcoin held by those two entities, by the treasury companies led by Michael Saylor and by the ETFs led by Larry Fink's BlackRock. Even if we remove Michael Saylor from this chart, we can still see that the other companies continue to buy Bitcoin. Now, not all of this Bitcoin is lost, but a good fraction might. This is the BTC that hasn't moved for the last 5 years. That's as a fraction of all of Bitcoin. So this is going up faster than the Bitcoin mining. And it probably doesn't even matter if this Bitcoin is lost or if it's just held by very long-term wealth allocators. Because Bitcoin that's not floating and is stacked away is Bitcoin that's supporting the price. So this line going upwards over the years is helping the Bitcoin price appreciation. Bitcoin will at least grow by 6.8% per annum. That's how much the US dollar is devaluing over time. This here is USM2. This is a linear scale. Here's the same on a logarithmic scale. So really, in percent, the money supply tends to grow relatively consistently. But I don't think we will stop at 6.8%. I think the miners will stay in business. I think we can reach the required 19% annual growth. And that's because of purchases through Wall Street, so through the ETFs and the treasury companies. And that's also due to the long-term trend of more and more Bitcoin getting stacked away or getting lost. And so while this is not a pretty chart that the number of active addresses isn't going up, this is not necessarily something that's required for the price to go up. It would be nice if this continued to grow, but even if it doesn't, the tokenomics, the laws of supply and demand, they are very much in favor of a long-term positive development of Bitcoin. But of course, since Bitcoin is a risk-on asset, if, say, the AI bubble was to suddenly pop, that wouldn't be great for Bitcoin's price either. Bitcoin tends to move in a levered way versus traditional assets. So if the Nasdaq 100 goes down by 10%, Bitcoin is very likely going down by 20% or even more. Really, if you just want to time the macro cycles, all we have to do is to look at activity. When are transaction fees high? That's probably when attention is high as well, and that's when we want to sell. Currently, we are not there at all. The best time to allocate more towards Bitcoin though, that's when the average holder is in net unrealized losses. So when the portfolios are in the red, when the average investor in Bitcoin sees a price today that's lower compared to the purchase price. That's this horizontal line here in black. So whenever we are in net unrealized losses, we want to get in. That was true at the minor collapse in 2018. That was true during COVID in 2020. That was also true after FTX and Terra Luna and Three Arrows Capital imploded. Currently, the average Bitcoin investor is still in profit, and that profit might get taken over time. That's the big risk. The average cost basis of the market is currently at 56k. Bitcoin starts to become cheap once we fall below that cost basis. Now, the cost basis over the years tends to, of course, go up. So what's 56k today might be 57 or 58k in a few months. But that's roughly the price level where things become really attractive again. If it's your first time here, feel free to subscribe. I publish videos regularly. Looking very much forward to seeing you again on YouTube. Feel free to also check out the premium membership. A link to premium pops up here on the screen. Thanks for watching. See you next time on YouTube or see you on premium. Cheers.